Good day. My name is Professor Anthony Revicchio. I am founder of the Financial Advisors Group, a 30-year money management firm, and I am CEO of Revicchio Online Income Tax Advisors. Ladies and gentlemen, we are here to talk about income tax planning for homeowners. Please grab a pen. I will be sharing with you as I share with my students, except my students get a 2-hour lecture. You're going to get a 10-minute lecture. So grab a pen, take notes. I have notes I'm going to share with you as well. And I'm going to try to keep this very, very simple and get right to the chase. So when we talk about income tax planning for homeowners, right, what is our goal? Well, our goal is, of course, to maximize our tax benefits, but also our home benefits, right? And of course, we want to get the most of both worlds. The simple rule of thumb to know which world is better, these worlds being called the standard deduction, right? I'm sure you're aware of that world if you're a homeowner. Do I take the standard deduction or do I itemize my deductions? That question is a very, very serious question that one must get ready to answer. Why? Well, if you're single, well, then you get a standard deduction of about $15,000. Of course, if you're married, then you get a tax deduction automatic, standard tax deduction of $30,000. And of course, some tax preparers, once they know that you're not itemizing your deductions, that you'll just take the standard deduction, they'll go, oh, we'll charge you a lower price because it's less paperwork. And in theory, that is true. But, you know, what are you leaving on the table by not itemizing, right? Are you leaving any money on the table? Are you really maximizing your deductions, right? If you're single or married, we know you get an automatic $15,000 or $30,000 standard deduction. If you decided to itemize, what available areas are there for you? Well, if you itemize, remember, number one, you get to write off your mortgage. You're allowed to write off up to $500,000 of your primary mortgage. So, of course, that's one area. Second area, being a homeowner, and if you decide to itemize, you also want to write off your property taxes and your state and local taxes. Big hint this year, ladies and gentlemen. I'm sure you heard the government has changed what is called the SALT provision. State and local tax provision. That is now not $10,000 anymore. You are allowed to deduct now up to $40,000 in city, state, and property taxes. So again, right, your mortgage and then your property taxes. Now, have you had any home improvements? And if so, have you shared that with your income tax advisor or preparer? And make sure, yes, you got to fill out more paperwork to take advantage of those deductible areas. I'm talking areas such as energy, right? You better take advantage of it because pretty soon it's going to be gone. But there are still many areas of energy that are available to one if they have one. Do you have an office in your home? Well, then you should be taking advantage of home office deductions, right, in your home. When you decide to sell your home, right, did you know you're allowed to sell up to $300,000 of it tax exempt? A little tricky, but very easy to do, very easy to use as a tax deduction. These areas are only available to you if you itemize. So, again, you know, you want to say, yes, I want to maximize. Am I maximizing doing the standard deduction or maximizing using the itemized deduction method? Forget the cost of the tax return, ladies and gentlemen, because that's not important. What's important is the net return, right? If you need any help with this, feel free to give me a call. 347-575-5045. Ladies and gentlemen, be tax smart. Have a good day.